Good afternoon and good evening, everyone, and welcome to Forecasts Aren't Just for Meteorologists, Why Every Business Needs One. My name is Colin Mahan, and I'm a Director of Programs at the Nasdaq Entrepreneurial Center. And for those of you who may not know, the Nasdaq Center is a nonprofit that's building a better path for entrepreneurs worldwide by improving inclusion, access, and knowledge in entrepreneurship. As you're going to see in the chat in just a moment, the Nasdaq Center provides programs, resources, and exceptional mentorship to entrepreneurs across all races, industries, and geographies. So check out those links and resources in the chat. I have a couple of housekeeping items before we get started. Firstly, we'd love to know where you're dialing in from, so let us know where you're dialing in from in the chat. Secondly, we're going to open up for live Q&A at the end of the event, so please submit those questions for our speakers in the Q&A function at the bottom of your screen throughout the presentation. We'll try our best to get to them all. And lastly, when you registered for today's event, you were automatically entered into a promotion drawing to win 3 months of free CFO services for your business. More on that in just a moment. Now, none of what we do here at the center would be possible without all the amazing support from our sponsors, including Nasdaq, Lehigh University, BMO, Airbnb, KPMG, Wilson Sonsini, Woodruff Sawyer, Microsoft Entrepreneurship for Positive Impact, BPM, and HubSpot for Startups. We're humbled by their contributions and hope you're grateful too. Now, I've got a couple of polls that I'm going to launch before we get started, just to take a quick temperature gauge and learn more about how you're doing today. So first one, how are you feeling about your business? Q4 2023, are you optimistic? Feeling a little survival mode, anxiety? Let us know. We use this information to provide the additional wellness resources for you, the entrepreneurs we serve. So let us know, and thank you for voting. I'm gonna let this go for another moment. Looks like optimism is in the lead, which is good to hear, but understand that there's a little bit of anxiety and survival mode out there. So hopefully our presentation today will help with that. Now, the second poll I'm going to launch is what's keeping you up at night? We use this information to fuel the upcoming months of programs that we're going to be providing for you, the entrepreneurs. So is it finance, sales, marketing, scale, team, or pivoting? So let's see. Sales looks like it's in the lead, which is good because today's topic is forecasting. So let's end this poll. Looks like finance and sales are at the top of the key, but followed by a little bit of marketing. So we'll take that and hit the ground running. Now, do you have a financial forecast? So this poll is going to just help our speakers today understand where you're at and how much detail they need to be getting into, but hoping that you have a good idea. So let us know. This is helpful information for us today. Let's see. I'm going to end this poll in a moment. Looks like many don't, which is good because hopefully you're going to learn a lot about that today. And then the last poll is who manages your finances today? Is it a bookkeeper? Is it a CPA, CFO, CEO? You don't manage them, or are you doing it yourself, brother? So let us know. All righty. Ooh, it's kind of all over the board. All righty, let's see. Okay, I'm going to end this poll. Share those results. So it looks like many are using a bookkeeper, some CPA, some have CPO. Other is at the top, so maybe that's just you're doing it yourself and you don't manage them. So that's good information for our speakers today. So without any further delay, please join me in giving a warm welcome in the chat to our special guests. First up, we've got Niamh Kristufek, sorry, Niamh, head of U.S. business banking at BMO, and she's also a board member at the Nasdaq Entrepreneurial Center. Thrilled to have you. And then we have Heather Tuason, who is founder and CEO of ARENA. Niamh and Heather, welcome, and over to you both.
Thanks, Colin. Happy to be here. I'm excited. My name is Niamh Kristufek. As Colin said, I'm the head of U.S. Business Banking, our small business group here at BMO, and I'm so excited to be here with Heather. Heather, you want to introduce yourself?
Hi, everyone. I'm Heather Tuason. I'm the CEO of ARENA. We offer fractional CFO services to businesses within the U.S. and Canada.
Great. I think Colin gave a little bit of a teaser about a drawing. Heather, do you want to give a little bit of detail on what that drawing is? We'll get that little bit of housekeeping done.
Yeah. Thank you, Niamh. So ARENA has partnered with BMO to provide 3 months of CFO services to business clients who registered for the event today. So just by registering, you're automatically in the drawing. The service will be available to 5 lucky winners. BMO's covering $1,500 for each winner. So we are really excited about offering this to 5 winners today. And we really thank BMO for the support in allowing us to provide this service to businesses. Winners will be selected after the webinar, and ARENA will notify them via email in the next couple of days. So super exciting that what we'll talk about today will be 5 lucky winners will get this done on behalf of their business.
So that means people still have to take good notes because you don't know if you're the winner quite yet.
True.
So
Great.
I was supposed to say, Heather, do you want to jump right in? Because this is
I say we jump right in. I
expertise.
think what we do to set this entire conversation up around financial forecasting is really, let's talk about a business. So if we can move to the next slide. Let's go ahead and discuss. I'll give an example business. This is something that is, as we think about financial forecasting for businesses, it's very, bringing it to life and making it real and applicable to your business is hard, because you often think about it as basically an extra activity that you have to complete on behalf of your business, or it's off to the side and not actually intertwined with your day-to-day operations of your business. So what I thought I'd do today is bring to life a life example. Wheats Landscaping is a landscaping company. They're based out of Northern Virginia. They started out more than 20 years ago in the area, and they started off with something very basic in their business. They basically provided a service, and they actually started it out for free. They mowed the Little League fields in the community. That then the word spread about Mike Wheat's services through Wheats Landscaping, and people started hiring him to mow his lawns. Now that's a service-based business. And as we get deeper into the conversation today, we'll learn a little bit more about why forecasting is a bit different for service businesses. Well, Mike didn't stop there. He added on to his offerings as he grew bigger and bigger. And what he did is he added lawn care as repetitive revenue, as we talked about. Then he also added landscaping, to where he would basically buy the shrubbery first, so he's out money first, and then he would deliver it, and he'd also have the service component of planting all the shrubbery. So his landscaping business was a combination of both products and services. In addition to that, he then added on hardscaping, as you can see from his photo. This photo is from his website, and hardscaping again is both labor and product. In the winter months, he also added in snow removal, as he's in the Virginia area, which has all 4 seasons. So the core principle that he put in place for his business to keep his employees happy was that he was going to pay his employees every Friday, regardless of when his clients paid him. So this created quite a challenge for Mike. And early on, he really had to build out a financial forecast to know when his revenue was coming in for both his products and his services that he was selling, if it was one time or recurring, and also how to make sure that he had money in the bank for cash flow purposes to pay his employees on an every Friday basis. So I thought this was a good kind of backdrop to today. We'll reference it a couple of times as we dive into the mechanics of a financial forecast, just to get us our knowledge around a service-based business and a product-based business, and selling things versus services, and how that shows up differently as you create your financial forecast. So with that, let's move on to the next slide and talk about a little bit more about why this is very important for your business. So I'll start off by saying, and Niamh, I'll lean on you a little bit for this as well. Sure. 90% of businesses don't have a financial forecast. The polls here today were great. It came in at 71% having financial forecasts. That is awesome. So you're already a step ahead. The other reason the people that are attending this session today are a step ahead is you want one. You obviously have a desire to learn more about how to create one, how to enhance yours that already exists. And so applause to you for showing up today. We believe that it is one of the reasons why there's a core stat that the SBA produces, which is 50% of businesses failing by their 5th year. We believe one of the main reasons why is they don't financially plan. And that's another reason why we're really pushing businesses to really think about financial planning and putting in place a financial forecast for their business. The other reason why now is the time to really think about putting a forecast in place is the economy. So 61% of invoices are being paid late in 2023. This is remarkable figure. I haven't seen this figure since the financial crisis. It's up from 42% just last year. So if we think about somebody doing having a business that they provide to their clients, and they have net 30 terms, meaning they issue an invoice and the client has 30 days to pay, 61% of those invoices are going beyond that 30 days. And most oftentimes that's bleeding into 65 to 90 days between the time you perform the service to the time you receive money for it. That's hard for a business to manage. So now is a better time than ever to put a financial forecast in place for your business. And I'll turn it over to Niamh to kind of give some more statistics from a banking standpoint.
Running out of capital is the second biggest reason businesses fail. And 33% are experiencing challenges or failures due to lack of capital. And part of that is when we talk to business owners about their cost base and what their cost base really is, a lot of them haven't taken the time to break down what their costs really are. They haven't taken the time to really look at a new customer or a new product to say, is it profitable? Is it smart growth? Is it not smart growth? And can I afford to grow in that way? And really, a forecast is a roadmap. It's a roadmap that gives you discipline so you make the right decisions for your business so that you can succeed. And is it worth adding risk to grow in that way? And so really, it's just a way, I always say, even just in everyday life, when you write something down, it makes it a lot more tangible. When you take the time to cross it off a list, you're more active and more likely to get it done. The forecast is a discipline tool, so you really get into the weeds in your business. We're all busy. Small business owners being busier than others because you wear multiple hats, like the other group that is running their finances and running their business. This is the pull up and the discipline to make sure you're making the right decisions for your future. So that, that business owner who wants to put his head on his pillow and knows he's going to pay his employees every week. I hear that so often. Putting it to paper makes it real. Making it real makes it tangible, and it's a plan. So that's really such a huge thing. I have previous parts of my career, I worked with defaulted borrowers only. And so much of it was, I didn't realize I wasn't growing in the right way because I never broke down my cost base, or I didn't know I was going to run out of capital because I was growing too fast. So it's such a powerful tool. And then last but not least, a lot of times, it's hard to get your first small business loan. I think we all know that. Either you don't get your amount that you need, or you don't get approved at all. And part of that is just good bookkeeping. And the forecast grows into that. Like if you sit down to write your forecast and you don't have clean bookkeeping to look back at, it's probably because you haven't done the initial steps. So the forecast is a really powerful tool in hygiene, but it also makes you a lot more likely to get approved for a small business loan. Nobody likes paperwork. Nobody goes into their industry because they're dying to do paperwork, but it is really a boon to the business to get this step right. So Heather, I think I'll kick it back over to you and your expertise.
That sounds great. Let's move on to the next slide and let's talk about what a financial forecast is. Just start with the baseline here. So financial forecast is projection. I think there are a couple typos on this. Projection or an estimate of likely future revenue and expenses. So it really is an estimate. A lot of people get bogged down with creating their financial forecast and make the following mistakes. They make them too complex. They make them too precise. A financial forecast often has 00.00. It's $100, it's $1,000, it's $10,000. Precision is to get started. Don't get bogged down with precision. So one mistake business owners often make is they get too precise and they get too complex in the number of categories that they want to predict. Start off with general buckets, and we'll talk a little bit more about that as we move forward. The other mistake that business owners often make when they think about their financial forecast is they think about it like their personal finances, and it's actually the inverse. So when you think about your personal finances, you're thinking about how much money I have coming in from my job, and I put a budget together, basically your expense budget, against that. In a business, what sets you up for success is actually creating your revenue forecast ahead of your expense forecast. And most successful businesses really have like a finer tooth, a finer approach to building their revenue forecast first. And don't take into account your expenses. Apply that after you're fully complete with your revenue forecast. And that's why that's so much different than managing your business like your household income, where most people are on a fixed revenue stream through their paychecks. And they have what is controllable to them is their expenses. In small businesses, what's controllable to you is both your revenue and your expenses. So begin with your revenue figure. It will set you up for more revenue in the year, and then allow you to think about expenses to drive that revenue figure. So that's the second thing that often businesses, they don't take into account as they create the planning for their business. The other thing that they do is really they don't incorporate it into their regular routines. As Niamh was saying, it has to become part of the fabric of what you do every day. So think about ways that Mike Wheats has actually taken his company, put his financial forecast in place, and is able to pay his employees every single Friday. The way that happened is he incorporated it into his business. He created basically a monthly business review with his finance team that he worked with to build his financial forecast. And then what he did is he was very aware of his cash position, and he knew that he could meet the expectations of his employees. So folding it into your regular management routines is super, super important. I recommend that businesses do this. They put together about 3-year financial forecast, and they revisit it every month. You will you'll be on the mark with the months that are closer into where you are today. So for instance, if I'm doing a financial forecast today, my next 6 months out will be a little bit more predictable than it will be beyond that in my financial forecast, but visit it every month, compare it to your actuals, and make adjustments. A financial forecast isn't fixed. So it is meant to be a very nimble tool that you use to help you forecast where your business is going and how much it's going to cost you to get there. So with that, I think what we do is let's move on to the reasons why. Let's move to the next slide.
Nope.
I think it's the one before that. There you go.
There you go. Sorry, guys. As you can see, there's external and internal factors for why you need a forecast. There's a lot of external reasons. I talked about applying for a loan. If you're looking specifically even at an SBA loan, they're going to ask you for a forecast. So they're going to look at your back, but they're also going to look at your forward-looking forecast. And depending on where you are in your time period of growth of your business, a traditional loan lender might ask you for your forecast as well. Investors, those of you who are out there looking for investors, are going to really kick the tires on your business plan and your forecast. You wouldn't go and invest in someone else without a strong forecast. They're going to want to get under the hood and look and see what you really think. If you're working with a marketing partner, they're going to need to know where you think you're going and where you want to go in terms of your financials, not just in customer counts, not just at ideas, but you really need to look at a forecast to see, is the marketing spend worth it? Are you getting a return on your marketing dollar based on where you think your revenues are going to grow and how they're going to grow? In general, just when you're talking in conferences, in settings, when you're talking to peers, peer-to-peer is a really good way to look at your forecast, because then you can see and it's a little bit of a litmus test, right? Like, am I way off? Do I have the same assumptions that they have? Is my competitor doing something I'm not? When you look at yourself and you use a forecast, you're really looking at a report card. It takes the personal out of it and maybe the branding, in my terms, the squishiness. But when you can look at a forecast and you have a really good peer who might let you under the hood of theirs and you're going to help each other grow together, even if it's in a different industry. I always say, if you have a really good peer who might own their own business, even if it's not yours, kick the tires on each other's. Ask their assumptions, prove why you think it's good and valid, and then see if there's other opportunities that you're missing out on. A coach, if you have mentors that are helping you in your small business space, having them look at your forecast and kick the tires with you, I think is also really invaluable. Internally, how do you set goals without a forecast? How do you set goals for your salespeople? How do you set goals for yourself? And then how are you holding your team accountable in spending as well as in growing revenue? It's really your internal and your external scorecard that really helps you design where you're going. We say that you don't have to be a meteorologist, but you do have to be a responsible business owner. So it's kind of the rules of the road of how you're going to run your business. You can look a month ahead, you can look a quarter ahead, and you can look a year ahead. There's different time periods that might make sense for where you are, but you really do need one to show that you have the discipline to run your business. Heather, anything you would add?
Yeah, I think you hit on all the ones that were top of mind for me. And I think the one thing that is very common that I think often banks see all the time are what I'll call sloppy financials. And that is both sloppy past financials and a sloppy view of your future. And that is leads very quickly to a downturn, like a turn down of that loan. So as you think about how you approach, how you show up to your bank, how you show up to that venture capitalist, how you show up to anyone who is going to be a part of your company and see it grow, whether that's an internal hire or not, a financial forecast is a tool to enable that to happen. Cool. So let's move on to the next slide and let's talk first about the revenue drivers and like what influences your revenue projections before we dive into how you put this in a spreadsheet or how you put this into your accounting tool. So we're going to first talk about revenue because as I mentioned, most businesses don't do this first. They basically say, oh, I have a pot of money. What am I going to do with it? And that's actually the inverse of how you should be thinking about your business. And that's the very first coaching thing we typically instruct our businesses when we first start working with them is let's talk about revenue. How much money do you want to make this year, right? How much money do you want to make in the near term between now and the end of the year? As you think about building your forecast, think about these 4 dimensions. First, think of your prior performance. And as Niamh mentioned, having your books in order, meaning your categorization of your transactions to date, both your revenue and your expenses, is the first enabler to a financial forecast. So prior performance, start as a baseline. I always, if somebody's just getting started with their very first financial forecast, I always say, copy paste what happened last year and let's enhance it. So how much money did you make in each month? What categories of revenue came in? Was it recurring revenue, subscriptions? Was it service-based revenue, time spent? Was it an actual product that you sold and units of that? So think about that as your prior performance as the starting point for your business. If you don't have any prior performance and you're just getting started, because I saw on the registrants, there were a lot of people that were kind of ambitious entrepreneurs that were just getting started. If you're just getting started, start with 12 months. Put 12 months on a spreadsheet and ask yourself, how many products do you want to sell? How many services do you want to sell? And start to plot that out month over month. And if that's too daunting, do it on a quarterly basis. So basically you're filling in 4 cells on a spreadsheet. Get started. And that's the most important part with a financial forecast. So take your prior performance, layer onto that. Once you have those figures in your columns on your spreadsheet or your accounting tool, layer in your new ambitions. What else do you want to do in the coming years? In the near term year and in the out years. And by out years, I mean anything plus 1 year from now. So as I think about putting a financial forecast together for a business that doesn't have one today, I would put together a forecast that includes the last part of 2023, all of 2024, 25, and 26. So 25 and 26 are not going to have precision to them. They're going to be total guesses, especially to a newly formed or early stage business. But putting something down is better than not putting anything down at all. Those new ambitions. Do you want to launch a new product? Do you want to hire a new salesperson? Do you want to expand to a new geography? Those would be new ambitions that you would layer into your revenue forecast. Also layer in headwinds. Is my product not selling it very well? Could it have been impacted by the pandemic? Is there, other headwinds such as I will need to borrow money in order to enable my business and interest rates are really high right now? Whatever the headwinds are, factor that into your revenue and how that might impact things. And also look at benchmarks, exactly to what Niamh said. really take a look at most business owners want to help other business owners. And I myself came from the corporate world and went into the small business world, and I was pretty much astonished by how much help and support I got. And it is something where people will open up their books for you. And when you're in the corporate setting, that was like, no way, there's this privacy rule there that's unwritten somewhere. But it really is leverage your network, get to know your competitors, go to conferences, get the benchmark studies that are available online for your industry. There are many sources out there for that. And we'll load up a couple in the replay of this on the website. So those are the kind of 4 things that you need to take into account as you put together your revenue forecast. Let's move on to the next slide. And let's talk a little bit about the things you should consider with your expense forecast. Now, thinking about your expense forecast is highly dependent and anchored against your revenue forecast. If I say I want to grow 100% this year, it doesn't automatically mean I apply 100% across the board to my expenses. The hope is that the bigger you get and the higher ambitions that you have, that the actual profit margin of your business will grow. So that what I mean by that is that your expenses don't have to grow at the same rate as your revenue. So think about that as you put together your expense forecast. The most sensitive figure in a service-based company in an expense forecast are employees. And there are a few reasons for that. Recruiting employees, employee benefits that are associated with employees, also just the emotional attachment that small business owners have to their employees. And so it's hard to remove that expense category. It's a very sensitive and emotional one for businesses. And it is one that you should layer in first and get real clear on what you're planning to do over the course of your forecast. As you think about managing your employees over time, right? If you know that your company can't support the expense of an employee that you're paying for today, you have opportunities the longer out you have that awareness to go make those choices and really start to coach that person or that role into a different place. So knowing your employee drivers too. The other thing I'd add into this bucket here is that there's been a big move since the pandemic, really, into evaluating salary more frequently, hourly rates of employees more frequently, perks for employees more frequently, and adding on other perks. Retention of employees has been a hot topic, and it is one that should be considered as you're building out your financial forecast if you want to retain that employee base that you have. So again, take into account prior performance. How have your operations gone before? Do you have 10 tools in place today that do the same thing, and maybe you need to rationalize that? That forecast is a tool that helps you identify those things as well. So you're taking into account everything that's happened in the past for your business. And if you haven't had any past history in your business, you're creating an estimate. And again, it's a swag estimate to get you going. Investments. What do you want to invest in? Is it going to cost you money to build the next product that you had ambitions for in your revenue category? And if it does, how much do you think that's going to be? Sometimes what our clients will do is we will have them go and get quotes for the ambition that they have before actually doing it. So you can put it in the forecast and see how it impacts your business model. So oftentimes we're getting quotes in and we're not actually exercising those quotes until we know and are confident in our business finances that we can afford it. And marketing drivers. This is another one that's often overlooked by businesses as they think about their expenses. Marketing is interesting because oftentimes you have to put marketing dollars in and you don't see the benefit for months at a time. And one of the mistakes we often see if a client comes to us and they do have a forecast that includes marketing, we often see marketing expenses the same month as they expect new revenue to come in. And that often is not the case. So knowing when your marketing dollar actually takes effect is a great tool as you build out your forecast to know when you spend money, how long it's going to take you to make it. So with that, let's move on to the next slide. After you have this financial forecast put together, your revenue across your columns on your spreadsheet or your accounting tool and your expenses, of course, you're going to calculate the delta and see what your profit margin is or your net income. with that, once that is in place, I'm going to turn it over to Niamh to talk about what you can do and what other tools you can apply to your financial forecast.
Yeah, so I think this is the kick the tire moment on that forecast. And sometimes it's a glass half full and sometimes it's a glass half empty. It's really going to depend on, and you need to do a little bit of both. So you need to look at it and look and say, okay, is that really my revenue number? Is that my trajectory that my business is on? And is my pricing really what's in the market? And that's what I'm going to get for that kind of growth. So do a little bit of a litmus test, maybe even pressure test it. If I don't hit my growth, where will I hit what? And I decrease it. Am I still profitable? If I don't hit that price point, am I still profitable? If I stretched a little bit more, how much would I do? So you need to look at the drivers and say, how realistic are they? And are they glass half full or glass half empty? And should I be moving around? And on the expense base, it's a really good discipline to look at your expenses and also take a look and say, am I paying what I should be paying to my suppliers? Have I pressure tested my suppliers? To Heather's point, do I think my costs of my employees are going to go up in this competitive environment? Look at all your input costs and really test them. But then there's some other scenarios you really have to think about. If you have one concentration of a large customer, what happens if they pay you late? Can you afford for them to pay you 90 days late? Can you carry that? Do you need more working capital? If your finances are in order, maybe you need to talk to your bank about a line of credit because you need help financing working capital, which means you are spending money, maybe building accounts receivable, but not collecting in time, and you need a loan to be able to carry your working capital. Your forecast is going to tell you that if you test for slow payment by a vendor, or you have a large inventory need that you have to fund. So part of that is looking at those scenarios. And then we are in headwinds of a pretty slow economy right now. So you need to think about your product. If you are going into a harder economy, which we do believe we are, what service do you provide? Are you more of a luxury service or are you a necessary service? And can your customer base afford you? These are the questions, these are the hard questions you really need to think about. And I'm not saying do not do your business. There's a lot of great businesses that were built, during the recessions of our times. During the Depression, you see candy companies that were created in people's kitchens that are national candy companies today. There is always opportunity if the opportunity meets discipline. And just be honest with yourself about what you really need to do. And then really look at what's working, the efficacy of what's working. If your marketing is working for you, maybe invest a little bit more in your marketing and get a little bit more juice. But really what the forecast is doing is look at what's happening. Your finances tell you the story of your business if you write it down accurately, and it will help you make strategic choices. This sounds scary, but really it's a spreadsheet that is 12 columns plus the topic, the label, and 12 columns, and then maybe 15 rows that really matter. So if you can boil the ocean down to that, it will really inform. And then the what if, that's the scenario that either you're dreaming about or that's keeping you up when you put your head on the pillow and you quantifying it. So maybe it's not quite as scary. So that's really what we're asking you to do, is to have the discipline to look at the spreadsheet and then ask for help if you feel like you don't have the tools to get it done yourself. Take a stab at it, because if you're either going to pay for help or ask for help from other resources, taking a stab at it is the first thing they're going to ask you to do anyway, because you know your business better than anyone else. But take a stab at it and then ask for help where you need help. Heather, anything you would add?
Yeah, I think the only other thing I'd add is this discipline component is often overlooked. Once you put it together, once you put your financial forecast together, don't put it on a shelf. Make it part of your routine. And I know we've said this a couple of times, but it is, when I first started ARENA, I actually had a monthly business review with myself because there was nobody else at the company. So it created a discipline for me though. And it made me ask some real questions of myself and how I was spending at the time too. And, you kind of have to wear a couple of hats, because if you're a business owner, you're wearing the hat of the CEO of your business and the investor in your business. And to wear both of those hats, you would ask different questions at different times. And a financial forecast and the regular review of actuals versus forecasts will help with that. The other thing I'll just add in, once you have your financial forecast pulled together and a couple of scenarios applied to it to make sure that you can put your head on the pillow at night, then what you can also do is start to apply some metrics to the numbers that you see. So once you get to this point, a little bit more of an advanced key performance indicators you should monitor. The first one I always recommend to businesses is profit margin. Profit margin for your entire business, meaning all the costs and all the revenue that you receive. It's a pretty simple formula. We will upload a link to it after the webinar today. And then also profit margin by product and service. I can't stress this one enough. I have seen businesses come to me with a profit margin by product and service that is underwater, where they are in a situation where they should fire their customer, and they just didn't run the math. They put a quote out there for a customer, and they felt like they had to stay true to it. Well, in a couple scenarios, you can go back to those clients and really say, hey, we really need to rework this. But in some cases you can't, and you might be in a situation where you need to fire a customer. But the way to identify that, either at the time you're giving them quotations or as you're reviewing your business, is to look at profit margin by product or service sold. And there's a little bit more of a complex formula to that one. It's also on our website. We'll put a link to it after the webinar today if you're interested in that. And we're also happy to talk about that anytime.
Thanks, Heather. So I think if I was looking at themes, the theme would be to steal from Nike, just do it. And to do it with discipline, and don't put it up on a shelf, and keep using it and keep visiting it. So we're going to open up to Q&A. The last slide also has more resources. So if you're just starting out, I know ARENA's webpage has tools. BMO.com Business Insights has free tools and articles on how to get started as well, on a cash flow forecast, a business plan. There is a lot of guidance out there, as well as the Nasdaq Entrepreneurial Center. So there are people here to help you, and we're here to answer your questions. So, but this was set the table. It's critical. Don't be intimidated by it. At the end of the day, it's a spreadsheet. You could do it on a napkin. It used to be done on a napkin back in the day. We're telling you to do it on a digital. It'll be a little easier. But it's really just putting the discipline into the business. So Colin, you are our host.
I love it. And Niamh and Heather, thank you so much. As you mentioned, you got to set that kitchen table to get ready. Before we launch into Q&A, I have one last poll that I'm going to launch. And it's if you're interested in meeting in with one of our speakers and learning more about ARENA or BMO. So just let us know through this poll. And if you haven't already, drop those questions for us in the Q&A box at the bottom of your screen. Try to get to them all. All righty. I'm going to end this poll just because we want to jump into Q&A. But let's see. All righty. Well, we got a question here. This is totally awesome. And I have to rework our forecast for those 12 to 15 column rows. Which would you recommend to be the most important?
Oh, I have a quippy reply to that one, which would be the total.
Yeah.
The total of how much money you're making. Now, to all candidness, actually, each individual month is, of course, important. But really looking at what your annual totals are a number, those numbers are often referenced either on your loan applications as you're talking to others at conferences and peer networking events, et cetera. Just the question of what's your annual revenue is one of the most common questions out there. A lot of vendors, a lot of banking partners, they all anchor their teams around how big you are from a revenue standpoint. So understanding your annual revenue figure, which would be the total column of your revenue line, not net expenses, your total revenue. That one I think is the one you should have memorized.
Love it. Got another question here. If you're a service-based business, how do you gauge your forecasting? For this ups and downs.
Yeah, I didn't really dive into the seasonal businesses out there, small businesses, service-based businesses in particular. So there are a number of ways you can set up your contracts with your clients. And they can be on an annual basis, they can be on a 6-month basis, they can be a cancel at any time basis. So as you think about a service-based business, and as you think about forming that for the first time, be thoughtful around what you want your contracts to be. Of course, as you're just getting started, putting a 1-year contract into somebody's hands, you want to get that sale done. So you often make concessions and you make that shorter, bake that into your forecast, because at the end of that term, you could be losing that contract, right? And you need to go into that with a renewed contract and basically a new sale happening. So think about that.
And I would say, if you're not a contract business, if you're a general service business with walk-through traffic or not contracts, you need to look at your past to inform your future. And then that goes to analyzing your levers. Are you adding another salesperson? Are you adding marketing? Knowing what's going around you in your competitive environment. Is there another competitor moving into the market? You might have a decrease. It's really knowing the pulse of your business to be able to understand, are you going up and down? Are you going up, down, or stable? And then what do you need to do to stay stable if you're not in a growth mode?
Yeah, that's super helpful. Another question here. Can you advise on how to begin forecasting if I haven't started receiving revenue yet? Pre-revenue companies, we've got a bunch of those startups out there. So how do you look at that?
It depends when you anticipate when you're going to start receiving revenue. But if you have no plan to receiving revenue over the course of the next, say, the remaining part of this year and all of 2024, you will have an expense only forecast. And that would include, I often include my beta customers on there too. So if you are in that startup mode where you're realizing beta customers, I count the beta customers or the products that they're buying, even if you're selling it for free. Because then what you can do in your forecast is you can apply a cost to that service or apply a cost or a price to that product. And you can see, had these not been beta customers, what would have happened? And how could my expenses support that? So I always say, put the revenue line there, even if it's zero.
Yeah. So beta customers are customers that are your test subjects for your product, who you're not charging for those services. That was a question that came up. It's important to have a forecast, even if you're not building revenue, because you need to know how much capital you're burning through, right? It's even more important. If you don't have money coming in, you're burning the money going out. You need to know how much of a runway you have before you need to start charging revenue. So just as critical a tool for not having revenue growth right now is to make sure you know your burn rate.
You love that. Great advice. So what are some of the, since both of you have extensive experience with this subject, where are some of the things that you see people trip up on when it comes to forecasting? Overzealous, underzealous, what do you see there?
I think aside from the things I mentioned at the beginning, people are too precise, or they have no discipline around revisiting it on a regular basis, or they don't have one at all. I think the one place I have seen very, very ambitious revenue numbers, not having any foundation, and especially when they're seeking VC capital. And I myself have done it, right? You want to look really good in front of that venture capitalist who might be investing in your company. And what you do is you put these unheard of revenue forecasts out there that are not going to be achievable. I think what's important as you think about, especially after we've seen the economy turn a bit in the VC market, is it's really important to be real and in your forecast and layer on, through a scenario that Niamh was mentioning, layer on a what if you gave me money and I could build another product, this is what I think it would look like. And the scenario on top of the realist view is much more appreciated in the venture capital market, especially now.
Yeah.
I think the biggest mistake I've seen is trying to stretch to grow to the next level, not growing in a profitable way, and not even realizing they weren't growing in a profitable way. So their pricing wasn't covering their cost base. Because you can do that short term. If you want to stretch and get your name and you want to grow to get to a certain place, you can do that short term, but then you have to revisit either your pricing or your cost base, and not revisiting. It's one thing to knowingly put unprofitable services or goods out to grow. doing it unknowingly means you're not actually fixing the levers and you just keep growing in a way that's actually hurting your bottom line. So I've seen people do it in an intelligent way. They did it temporarily and either they negotiated their cost base down or they increased their prices after they built their brand. But I've also seen people just continue to grow revenue in a very unprofitable way, run out of cash and actually hurt their business long-term. So I think that's something I've seen, unfortunately, a lot in my career. And when hindsight's 2020 and they go, I didn't realize I was doing it.
Yeah, because you got to manage that cash out.
Yeah.
And I mean, you talked a little bit about this, but I'd be curious to hear both your perspectives on, given the current economic environment, we've got a lot of entrepreneurs out there who are optimistic, but some are in survival mode. Some are feeling a little bit anxious about the end of the year. So any words of cautious optimism that you have for our folks out there in terms of forecasts and what you see for Q1, Q2 next year?
Yeah, I mean, I do think we're going into a little bit of a slower environment, but I do think like good products and services still win out. Like people are still spending in the market on things they care about. So I think if you have a good product or unique differentiating customer experience, I think if you know your business and you're a storyteller who can get that message across and you feel differentiated from the person next to you, there is still space in the market. The small business owner is still the driver of the US economy. So I think the good still wins out, right? Good products, good solid products and services survive in down times. I think those that are not, those ones will end up not surviving, like in every other environment we're in. And so I think it's a matter of making sure as you go into these environments that you are making sure the core value proposition of your business remains intact. There are things you can do to reduce costs. There are things you can do to attract more revenue, but you have to stay true to your core business and understand its value proposition against someone else. Is your value prop that you're faster? Is your value prop that you're better quality? Like you have to know why you win or should win in the market and make sure you hold on to that.
Great advice.
Heather, anything you would add?
Yeah,
I think that was perfect.
love that. Well, you mentioned storytelling and I wanted to double click on that one. So let's say that there's a little bit of uncertainty on the forecasting horizon for the founders out there in the room. Any tips, tricks, words of advice around how important or how you can thread that story? You talked a little bit about the what if analysis, but can you dial a little bit more into that one to help our founders out there?
Sure, I'll get started. I would say that what is truly appreciated, given the audiences of today, of investors, even bankers, and I'd say, even vendors that you're telling your story to, because vendors also are going through a lightweight approval process to work with you. Telling your story in a genuine way, everyone has been where you are. Like you're not the first new small business owner. More than half of the US economy has employees that work for small businesses, more than half of the US working population. So you're not alone. It often feels that way, but you're not alone. And being genuine about where you are will create this connection of trust and confidence in you as a person, that what you're communicating to them is thoughtful, and it's also real. It's also authentic. So that would be my approach to all storytelling now, versus if you were to rewind this to 2019 when VCs were flying high and money was really flowing. I think the storytelling was a little different.
Yeah, and I think when you're telling your story and you're talking about even your numbers, I think validating that you've thought about the downside and what you're doing to buffer against the downside gives you credibility, right? I think saying, look, these are my challenges, A, B, and C, and this is how I've prepared for them, and this is how it shows up in my numbers, gives you proof of your business acumen and discipline that is going to give people comfort in this environment that might not have been necessary when things were a little bit cheerful.
Yeah. I think, yeah, the authenticity and clarity and the what if analysis is super important. We have another question here. And Niamh, I'm going to kick it over to you first, but Heather, I'm sure you have some words on this one. So can you, we have a question here from Aaron. Can you go into depth about the notion of separating personal finances from business finances? Not running your business like your personal financials. Niamh, I'm sure you see a lot of this at the bank.
Oh, if I could just tell everyone to go open a business checking account. They are affordable. There are low fees, especially for the startups out there. So please, 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 if I can tell you one thing, go put some money into an account and label it for your business and run all your business revenue and expenses through one account to start. Will give you the ability to separate your cash flows and really know if what you are doing is working. That's from your own personal as well as when you're talking to a banker. And when you're working with a bank, whichever bank you may choose, there is a start date with the bank. It's a running clock. You're an existing customer or a new customer. You get better benefits as an existing customer, and it doesn't apply to you as a personal person. So start the running clock, okay? Build the relationship today. It does not have to be a lot of money in the bank. It has to be in the business name. It will help you. So that's just from a relationship standpoint and a discipline standpoint. Heather, I know you can do a lot more from the financial management and control, so I'll let you go from there.
Yeah, absolutely. And oftentimes we see businesses who have their personal financials actually flowing into their business account. And that's not uncommon. Oftentimes business owners come to us and they're a little reluctant to open up their chart of accounts or their bank accounts to us to have us help them because they're embarrassed. And I'll say, don't be embarrassed. I see it all the time. We see, the IRS, of course, sees it all the time, which is not a good thing. But a couple of things there. So first off, I couldn't agree more with Niamh. Make sure you, number one, have an EIN number issued by the government. And that you will file taxes with, and they will either be flowing through your personal returns or separately. And that, if you don't have that, do that today. There are a number of ways to do it through your state employment commission. So go visit your state website to get that done. There are also tools out there that can help you through that, like LegalZoom. So that would be that'd be first step. And once that's done, that enables you to get the business checking account, because you will need that EIN number for that. It's kind of like you need your social security number to open up your personal checking account. You need your EIN number to open your business account. Then put a few dollars in there. Make sure you notate that that's an investment in your business, right? You have made a personal investment in your business just because you've made a deposit into your business account. So start treating it like a separate person, a separate individual. I call it like a child. My business is my child. I give it the same amount of care and attention as I do my children. And I treat them separately too, right? They're a separate entity. So start to really think about running all of your transactions either through that checking account and possibly applying for a business credit card to get going. The business credit card will help you build some credit. It does rely on your personal credit score oftentimes. So do your homework first. If that's applicable to you, whether it's going to help or hurt you, just do your homework on that first. And someone from our team can certainly help you to answer a couple of these questions. So I would say start with the financial tools of a checking account and possibly a business credit card to get going with the separation of the two. Secondly, identify what you use for what. I would say also, just as you think about your expenses, I'm in my home office. This kind of applies to both, right? So this is basically, I pay for my mortgage personally, yet I'm using it as a home office. There are all kinds of ways you can make that work from a business standpoint with deductions to your business. So there are lots of tools out there for this. I could go on and on. Maybe what I'll do is I'll put up some reference material I'll give you a couple of links to start to think about how to make sure that you're taking full advantage of any tax benefits that you might get by having a small business, and where to make sure you keep that separate and where it makes sense to be together.
Yeah, that's super Super helpful because, yeah, I would imagine going through one's own personal expenses versus trying to reconcile with the business can get a bit complicated and messy because I buy a lot of sandwiches. But that's super useful advice. Well, we're almost at time, but if somebody was to dial into the last 4 minutes of our amazing conversation here, and I don't know if you've seen in the chat, but everyone says this is amazing. So thank you so much for sharing with not only our community, but with your communities every day. If somebody was going to dial into the last couple minutes of this, Niamh, I'm going to start with you and then Heather, round us out. What's one key takeaway about financial forecasts that you really want people to take away today?
Yeah, I think financial forecasts seem a lot scarier than they are. If you already had the courage to start your own business, you definitely have the courage to sit in front of a spreadsheet and fill it out. And don't seek perfection to start. Just put some numbers down based on what you know. Like imagine you're chatting with a friend about your business and they said, how much money did you make last month? How much money did you spend last month? What were the major categories? And then just type it in and start from there, and you can refine it and just take it for what it is. It's a tool to give you discipline, to get the ghosts out of your mind that keep you up at night, put them on paper, face them, and then make really good decisions. So it's nothing more than that. There's so many fancy articles out there, but really it's just a way to get your thoughts down on paper, to give you discipline so you can make the right decisions. So what I would just say, it goes back to just do it and know that you have a lot more courage because you've already started your own business. That was the hardest part. So now just go and do this next step.
Amazing words of encouragement. Heather, round us out.
Keep it simple. Start off with it really simple. And there are a couple of tools. BMO has a great toolkit online, and ARENA has a toolkit as well. You can download spreadsheets from either site, and they're basically the same, and just start populating it. If you have any trouble, there are people on, through every walk of life, and the Nasdaq Entrepreneur Center has resources as well to help you through that process. And of course, me and anyone from my team here here to help you as well. So good luck, keep at it, and put your forecast together.
Yeah. Oh, I love that. Just do it and keep it simple. What a way to end this one. Well, thank you so much, Heather and Niamh, for taking the time to share your insights, your expertise with our community. We're getting a ton of feedback in the chat. This is amazing. This is great. Thank you for your perspective on rethinking and running our business. So on behalf of everyone on our team and everyone in attendance, thank you so much, Niamh and Heather, for joining us today. We're going to be following up with more resources. We've got more programs. We've got so much to come in the coming months. So just keep a lookout. But again, Niamh, Heather, thank you so much. And to everyone there online, we'll see you soon.
All right. Thank you.
Thank you so much.
Bye-bye.